Welcome to the ENGA Fundamentals Plus webinar video. In this video, we'll be covering a number of introductory topics that are important to the effective administration of the National Greenhouse and Energy Reporting Scheme. I'll start by running through some key terms that will be used throughout the session today. These are the agency, we, and us, all refer to the Clean Energy Regulator and may be used interchangeably. ENGA refers to the National Greenhouse and Energy Reporting Scheme. ENGA Act refers to the National Greenhouse and Energy Reporting Act 2007. Regulations refers to the National Greenhouse and Energy Reporting Regulations 2008. Determination refers to the National Greenhouse and Energy Reporting Measurement Determination 2008. EARS refers to the Emissions and Energy Reporting System, and the Department refers to the Department of Climate Change, Energy, Environment and Water. Topics we'll be covering today include the ENGA scheme, ENGA data uses and publication, ENGA reporting obligations and types of reporting including operational control, defining your facility, changes to corporate structure, acquisitions and mergers, part year reporting and deregistration, reporting contractors, EARS user management, and the safeguard mechanism. On the Clean Energy Regulator website, there is a suite of ENGA training videos. These training videos will cover today's topics in greater detail, as well as providing technical information relating to EARS data entry. The Clean Energy Regulator sits within the portfolio of the Department of Climate Change, Energy, Environment and Water, and administers several schemes relating to emissions reduction and renewable energy. These include the ENGA scheme and the safeguard mechanism, the Emissions Reduction Fund, the Renewable Energy Target, and the Australian National Registry of Emissions Units. Our responsibilities include providing education and information on the schemes we administer, monitoring, facilitating and enforcing scheme compliance, collecting, analysing, assessing and publishing information and data, accrediting auditors, and working with law enforcement and other regulatory bodies to ensure the integrity of carbon and renewable energy economic markets. The ENGA scheme was established by the ENGA Act in 2007 as a single national framework for reporting and sharing data on greenhouse gas emissions, energy production, energy consumption, and any other information specified under the ENGA legislation. It was established to reduce regulatory burden for reporters by reducing the number of duplicate reports they were required to provide to different Commonwealth, state and territory governments. Now we're going to cover off on ENGA data publication and uses. Data collected under the ENGA scheme is used to inform national, state and territory policy programs and activities. It also contributes to the Australian government programs that are responsible for international reporting obligations, such as Australia's National Greenhouse Accounts, that fulfil reporting commitments for the United Nations Framework Convention on Climate Change, the Kyoto Protocol and the Paris Agreement, and the Australian Energy Statistics and Australian Petroleum Statistics programs that report to the International Energy Agency. It is also key in underpinning other schemes and policy development. For example, the government's safeguard mechanism and reforms to the safeguard mechanism. By the 28th of February each year, the agency must publish the name of each person that was registered under the ENGA Act during the previous reporting year. In February each year, we also publish corporate Scope 1 and Scope 2 emissions and energy data, and data on designated electricity generation facilities. We also publish highlights of the ENGA dataset, including breakdowns by state, by industry, and by electricity generation source. The Corporate Emissions Reduction Transparency Report, CERT, is a new voluntary initiative for eligible companies to present a snapshot of their climate-related commitments, progress, and net emissions position. It represents this information in one place using a standardized framework. Participation is voluntary and open to companies reporting over 50 kilotons of carbon dioxide equivalent emissions a year under the ENGA scheme. Companies will be able to opt in to the 2023 CERT report from November 2022 via the client portal. If you would like further information on how to participate, please contact the agency. We will only publish data about registered corporations above the publication threshold. For controlling corporations, this is where corporate totals have combined Scope 1 and Scope 2 greenhouse gas emissions equal to or greater than 50 kilotons of CO2 equivalents. Where a controlling corporation has one or more Section 22 agreements in place, we combined all the data reported on behalf of the controlling corporation and apply the publication threshold test to the total data reported. If the threshold is met, we publish the data against the controlling corporation. For RTC holders, where a facility has greenhouse gas emissions with CO2 equivalents of 25 kilotons or more, or production of energy of 100 terajoules or more, or consumption of energy of 100 terajoules or more. ENGA reporting obligations. A registered controlling corporation is required to submit an emissions and energy report annually under Section 19 of the ENGA Act. The Section 19 report contains information on Scope 1 and Scope 2 emissions, energy production, and energy consumption for facilities under its operational control, and facilities under the operational control of its group members. A majority of ENGA reports are made under Section 19. However, there are other types of reports, including Section 22G and Section 22X reports, which I'll provide further detail on in the coming slides. Under the ENGA Act, a controlling corporation assesses its registration and reporting obligations by reference to the facilities that are under its operational control and under the operational control of members of its corporate group. Most people know what a controlling corporation is and is already registered. However, if you've had a restructure or a change of ownership in the last year, you should review your corporate structure to make sure you are still reporting under the correct controlling corporation. A controlling corporations group may consist of a controlling corporation only, or it may include group members. A corporation will have operational control over a facility if the corporation has the authority to introduce and implement operating policies, health and safety policies, and/or environmental policies. There may be situations where more than one person has the authority to introduce and implement these policies, and the legislation details how to identify who has operational control in these situations, and further information can be found on our website in the Operational Control Guideline. Correctly identifying and applying the definition of a facility to your circumstances will require the examination of a number of parts of both the ENGA Act and regulations. What constitutes a facility is broad, and the ENGA Act and regulations cover several varied and complex situations. In general, A facility is an activity or a series of activities, including ancillary activities, that involves the production of greenhouse gas emissions, the production of energy, or the consumption of energy, forms a single undertaking or enterprise and meets the requirements of the regulations, and are attributed to a single industry sector. The legislation sets out the reportable greenhouse gases and defines energy production and consumption. It also details what energy commodities are covered by the legislation. The ANZSIC codes are listed in Schedule 2 of the ENGA regulations, and where there are multiple activities, the principal activity must be identified. The principal activity is the activity that results in the creation of a product or service for sale on the market, and that produces the greatest value of all the activities in the series. The legislation does not define activity, series of activities, and ancillary activities. Using the Macquarie Dictionary definition, an activity is a specific deed, action, or function. A series of activities is a number of deeds, actions, or functions that occur in succession or in a particular order. And an ancillary activities is an accessory or a helping thing. Corporations should apply these concepts when determining the boundaries of a facility. A facility is not necessarily limited to a physical place or thing. For example, there could be numerous facilities within a single commercial building, or a single facility could be made up of numerous commercial buildings. The boundaries of a facility will vary depending on the activities that take place within the commercial buildings and the group members with overall control of these activities. The ENGA regulations set out the different circumstances in which an activity or series of activities will form part of a single undertaking or enterprise. These include occur at a single site, Regulation 2.16, are listed activities attributed to the main site, Regulation 2.17 or 2.18, are transport sector activities, Regulation 2.19, and are electricity, gas, water, sewerage, or telecommunication activities, Regulation 2.20. Corporations will also need to consider their circumstances to determine if the activities form part of a single undertaking or enterprise. Sometimes single site requirements are not practical. For example, transport activities are non-stationary in nature and difficult to apply the single site definition. Regulation 2.19 states that transport activities will form part of the same single undertaking or enterprise, provided that the principal activity is attributed to one of the industry sectors detailed in this regulation. The activity is attributed to a single state or territory, and the activity and its ancillary activities are under the overall control of the same corporation. Another example would be electricity, gas, sewerage, and telecommunication activities. Regulation 2.20 states that these activities will form part of a single undertaking or enterprise, provided that the principal activity is attributed to one of the industry sectors detailed in this regulation, and the activity and its ancillary activities are under the overall control of the same corporation. For transport activities, these are required to be in the same state or territory, whereas a network and pipelines facility may cross state or territory boundaries. It is important that organisations review their corporate structure each year and update it in years to reflect any changes. Corporations need to report on their corporate structure as at 30 June, which means that we are only interested in the changes that happened during the relevant financial year. For example, 1 July 2021 to 30 June 2022, for the 2021-22 reporting year. You should also ensure that your corporate structure reflects any new or disposed of facilities and that the correct group member is listed as having operational control over relevant facilities. There are 3 situations where acquisitions or mergers can affect an organisation's reporting requirements. For change of ownership of a group member, where there is no change in operational control over a facility, this will require the controlling corporation to update the corporate structure in EARS and continue to do Section 19 reporting. For change in operational control of a facility, if operational control of a facility changes from one group member to another, part year reporting applies. Controlling corporations are only required to report on the activities of its group members and facilities for the period they had operational control. For changes in ownership of a controlling corporation, where a registered corporation has ceased to be a controlling corporation, that corporation should apply to be deregistered, and the new controlling corporation must apply for registration under Section 12 and report for the corporate group. Provided that the corporation is deregistered before 31st of October, it would not have to provide a report for the reporting period that just passed. If it is not removed from the register before the reporting deadline, it will still be required to submit a below threshold report. And there is also a guideline on acquisitions, disposals, and mergers available on our website. Part year reporting applies where operational control of a facility has changed. Responsibility for reporting on the part year activities will rest with the controlling corporation that owns the relevant group member as at 30 June, including group members that have been wound up or liquidated while part of the registered corporation's group. In this instance, each controlling corporation reports on the part of the year that it had operational control. Part year reporting does not apply where ownership of a group member changes and there is no change to operational control, or there is a change in ownership of the corporate group and operational control of all the facilities in the corporate group remains the same. It is expected that the ENGA data will remain with the group member when this occurs. A controlling corporation may be eligible to be deregistered if it is below threshold and not likely to meet any of the thresholds under Section 13 of the ENGA Act in the following 3 financial years, or no longer meets the definition of a controlling corporation, which could be the result of a corporate restructure, merger, or takeover. They were registered incorrectly as it didn't meet the definition of a controlling corporation at the time of registration. Applications for deregistration are available on our website and must be submitted to us via email. Now we're going to cover off on types of reporting. As mentioned earlier, the majority of ENGA reports are made under Section 19. However, there are other types of reports. A Section 22X report, which is where a group member takes on reporting obligations for their facilities, or a Section 22G report, which is where the organisation that has financial control over the facility takes on reporting obligations for their facilities. The reporting deadline for all ENGA reports is the 31st of October. A Section 22X agreement allows a controlling corporation to transfer its Section 19 reporting obligations to other group members within its corporate group. The group member taking on reporting obligations must have operational control over the facility or facilities that are the subject of the agreement. To transfer reporting obligations, the controlling corporation and the group member must enter into a written agreement to transfer the reporting requirements for the specified facilities. There is no set template for the agreement. It is up to the parties involved to determine the agreement. There is no formal application process for notifying the agency of a Section 22X agreement. However, the parties entering the agreement must notify the agency in writing before the end of the financial year to which the agreement relates. It is too late to enter into an agreement for this year, but organisations can notify the agency for next year by the 30th of June 2023. Unless the 22X agreement specifies the circumstances under which the agreement will no longer have effect, the agreement continues to be in place even when circumstances change. A notification to the agency advising that agreement has ceased must be done in writing prior to the reporting deadline, 31st of October, following the relevant financial year. Please contact the agency if you would like further information about 22X agreements. The only other exception is a reporting transfer certificate, also known as an RTC. This allows reporting obligations to transfer from a controlling corporation with operational control over the facility to the corporation that has financial control over the facility. RTCs relate to single facilities only. This means if a corporation or group member wishes to take on reporting obligations for multiple facilities that it has financial control for, the corporation will need to obtain an RTC for each facility. The application form and guidance is available on our website, and the agency must take all reasonable steps to make a decision on the application within 90 days of receiving it. The applicant must have financial control over a facility in order to receive an RTC for it. Financial control is intended to encompass a corporation that has significant ability to control a facility through financial means only, and therefore give effect to decisions relating to greenhouse gas emissions reductions. To be eligible for an RTC, an applicant must first pass the reporting transfer test in relation to a facility. The requirement of the test can be found in Section 22J of the ENGA Act. An RTC holder may, with written consent of the agency, cancel its RTC. The cancellation takes effect from the date the agency gives consent. And in certain circumstances, the agency may also cancel an RTC. Corporations are required to report energy and emissions from facilities under the operational control of group members, including information relating to the activities of contractors and subcontractors. When determining who should report emissions and energy data associated with the activities of contractors and subcontractors, the concepts of overall control and operational control will need to be carefully examined with respect to each activity and facility. Reporters are required to include all activities that they have overall control over. This may include external workers, such as contractors, who have been employed to perform activities within the facility. These activities should be included within the facility's activities when reported. The question of overall control can be difficult to resolve. In some cases, the activities of contractors can mean additional information needs to be included within your report. Please contact us if you have any outstanding questions on overall control, and we can provide guidance on the matter. If the activities performed by a contractor meet any of the thresholds listed under Regulation 4.30, as listed on this slide, the reporter is required to provide additional information. This information is entered through EARS and submitted as part of your report. The report is required to provide the listed identifying information including name of the contractor's identifying details such as ABN, ACN, or ARBN, total greenhouse gas emissions produced by that contractor, total energy produced by that contractor, and total energy consumption by that contractor, as well as nominating the energy and emissions involved in the contractor's activities. This nomination does not add to the reporter's totals, it merely flags the quantities as being caused by the contractor's activities. Compliance. It is important that reporters are aware of their ongoing obligations to report, as well as the importance of record keeping in meeting these obligations. A reporter must keep records of activities for 5 years from the end of the year in which the activities take place. And the records must allow both the reporter and the agency to ensure the reporter's compliance with the Act. This is likely to involve a list of all sources monitored, the activity data used for calculating reported emissions and energy, documentary evidence relating to calculations including invoices and analytical results, documentation of the collection process for activity data, documentation of the decision-making process behind data collection, including decisions to include or exclude any activities from reporting, decisions on selection of method, decisions on facility boundary definitions, and decisions on the use of certain standards for sampling or analysis. The agency has consistently found throughout audit reports that organisations that record this information in an accessible, centralised format, sometimes known as the basis of preparation, are more reliably able to meet their obligations under the ENGA Act. The agency encourages voluntary compliance among reports and provides a range of guidance material, including this webinar, to help reporters to understand their rights, obligations, and entitlements. The agency also encourages scheme participants to voluntarily notify us when you have identified reporting mistakes. We view this as an indicator of a positive compliance attitude and a demonstration that the scheme participant is committed to meeting its obligations under the legislation and to providing accurate and complete data. If you notice an error in a submitted report before the deadline, we ask that you contact us as soon as possible. A request to unlock a workspace must be made in writing, and after receiving the necessary information, we will open your EARS workspace as soon as possible. If you notice an error in a submitted report after the submission deadline, including for previous year's reports, we again ask that you contact us as soon as possible. After receiving the necessary information from you, we will review your report and notify you as to whether or not resubmission of the report is required. Resubmissions will generally be required when the nature and extent of the reporting errors make the report non-compliant with the requirements of the ENGA legislation and therefore will contribute to an organisation's compliance history. The voluntary nature of the disclosure will be taken into account when considering overall scheme compliance. The Client Portal's self-service function allows organisations to manage their own user permissions and access to their organisation's EARS account. Anyone with an organisation administrator role can update user permissions for the organisations that they manage. It is important that organisations manage access to their EARS accounts to enable seamless transactions and to ensure the Clean Energy Regulator is able to contact the most relevant people from the organisation. The executive officer and ENGA contact person associated with each registered organisation are automatically issued the organisation administrator roles. An organisation administrator can then provide access to additional users via the self-service function. If both the executive officer and ENGA contact person have left the organisation and there are no other users with the organisation administrator role, the new ENGA contact person will need to submit an addition of a new contact person form, which is available on our website. Once the form has been processed, the new contact person can then add new users accordingly. It is beneficial for organisations to have multiple executive officers to enable seamless transactions during the reporting season. The Client Portal User Guide, which is available on our website, will step through how to add, edit, or remove EARS user access. It is important to note that EARS user permissions are determined by the role they are assigned. We have updated the Client Portal User Guide, which now includes a summary table of EARS user access roles. At the very least, each organisation must have an ENGA contact person and an ENGA executive officer. However, there are also several optional roles that can be assigned, which provides organisations with greater flexibility for user access, including Nominated Report Submitter, which provides further flexibility for submitting the ENGA report. Internal records must be kept proving that you had the authority from the executive officer to submit the report. The safeguard mechanism applies to facilities that emit more than 100,000 tonnes of CO2 equivalents Scope 1 covered emissions in a financial year. This extends to businesses across a broad range of industry sectors, including electricity generation, mining, oil and gas extraction, manufacturing, transport, and waste. The safeguard mechanism provides a framework for Australia's largest emitters to measure, report, and manage their emissions. It does this by requiring large facilities whose net emissions exceed the safeguard threshold to keep their emissions at or below emissions baselines set by the agency. The safeguard mechanism began in 2016 and complements the emissions reduction elements of the Emissions Reduction Fund together with the reporting obligations under the National Greenhouse and Energy Reporting Act. We'll be looking at some key terms and concepts, as well as briefly looking at the stages of applying and reporting under Safeguard, including baseline applications, and touching on the consultation being undertaken by the Department in updating the Safeguard legislation. Please note that there is far more than we can go into today, so I'll be touching on the general concepts. There are comprehensive guides to the current baseline types on our website, and the team is always available if you have any specific inquiries. To start with, there are some key terms used in Safeguard which are separate to the ENGA reporting. Responsible emitter. Safeguard obligations rest with the person with operational control of the facility. This person is referred to as the responsible emitter and may be an individual, a body corporate, a trust, a corporation sole, a body politic, or a local governing body. The responsible emitter is required to keep the facility's net emissions at or below its emissions baseline and have the obligation for managing any excess emissions position. Baseline. Under the safeguard mechanism, facilities are given a baseline, which is the reference point against which net emissions levels will be assessed. Net emissions are the covered emissions from the operation of the facilities plus any adjustments from the creation or sale of Australian Carbon Credit Units, which ACCUs, issued in relation to abatement activities occurring at the facility. Facilities must keep their net emissions at or below their baseline. Production variable. A production variable is the product from the facility. This can be a saleable product or process, or a major source of emissions such as coal mine waste gas, which are produced at the facility as part of creating another product. The Safeguard Mechanism document, published by the Department, provides the definition, inclusions and exclusions for almost all industry products, and these are referred to as prescribed production variables. Emissions intensity. An emissions intensity is the relative amount of CO2 equivalent greenhouse gas emitted by the facility compared to the total product produced. The Safeguard Mechanism document also provides industries-based default emissions intensities for the majority of prescribed production variables available. Many people here may not need to engage with Safeguard, as your facility emissions will be below the threshold. But what do you do when you realize your facility emissions will be over 100,000 terajoules? Let's take a look at the application path for a production adjusted baseline, which is the common option for most facilities in the scheme. First of all, you need to look at your options, and a good starting point is our website and the guidance documents contained within. You will need to decide if you require a consultant to assist you with your application. However, this is a business decision and is not required to complete an application. With the exception of landfill facilities, all applications require an audit to be completed, and you will need to allow time to find and engage an auditor and for them to complete their review. Next will be to submit your application. Once your application is submitted by the cut-off date of 31st of October, it will be reviewed by the Safeguard team and a decision will be made by the delegate. This approval is for a production variable and an emissions intensity, which will be used to calculate your baseline each year. Next, you will need to submit your production, or it will be taken from your ENGA reporting depending on the type of industry you're in. Once you have submitted your production, your baseline will be calculated by multiplying your production by your approved emissions intensity. This will then be compared to your reported emissions under ENGA for the period. Facilities under Safeguard have an obligation to keep their emissions below their baseline. Where the facility has exceeded their baseline, we have guidance available on our website to assist you with your next options. In following years, you will only need to submit your ENGA report and your production data. There is no need for further applications unless you wish to apply for a future baseline. The Department has recently run consultation on the options to reform the Safeguard Mechanism. This was done to help industry reduce emissions in line with Australia's climate targets. This is undertaken by the Department as a separate body to the regulator. Consultation has since closed, however, a link will be provided at the end of this presentation for those who wish to review the document. The goals of the consultation are gradually reducing baselines to help Australia reach net zero emissions by 2050, introducing credits for facilities that emit less than their baseline, providing tailored treatment to emissions-intensive trade-exposed facilities so businesses are not disadvantaged compared to international competitors and emissions do not increase overseas. Where the Department creates and establishes the legislation, The regulator's safeguard team provides guidance and assistance to implement and understand the legislation. This is done by discussing eligibility, assessment of applications, publication of data and information, education, guidance, and engagement. This is done both face-to-face and via online guidance documents. If you have any further queries on the safeguard mechanism, you're encouraged to review the safeguard mechanism portion of our website. This contains directions on the topics mentioned above and detailed guidance documentation for a number of scenarios. If you have any questions, please email the team via cer-safeguardbaselines@cer.gov.au as a direct contact to the team. The information covered in today's webinar is supplemented by a range of training tools and written guidance documents, which are available on the agency's website.